Today, I'm going to be running you guys through 3 core elements of my intraday trading strategy. So if you tuned in to learn how to intraday trade, this is the right video for you guys. So let's get into it. So right now on the charts, we have Euro USD. We have 2 to 3 vertical lines, just basically separating out the days. I like to separate my days so I know exactly what day is doing what. And we have Euro USD's trading stopping at around 7 o'clock in the morning because that's technically when I wake up. I'm not necessarily getting active at 7 specifically, but normally it's 7 o'clock when I wake up. So when I first check the charts, it's probably going to be, maybe 7:30ish. So now when it comes to the 3 core elements, this is what I like to see. First, I need to have an area of interest where I want price to get to. Here we can see that if I bring out this line tool, mark up from this high to this high, this is relative equal highs. And so this is one of the things I want to see. I want to know that there is an area where price is going to be drawn towards. And there's reason for this, is because there's going to be money up here. And if price is drawn towards the money, that's why I always tell you guys to trade towards the money, then you should also get in line with that. There's obviously going to be money above these highs too. But the key one, the main one I'm looking at is this high over here. The second thing I like to see price move the opposite way first before going long. I like to see price taking out some form of liquidity on the opposite direction. So if I want it to go higher, I want to see some kind of liquidity taken out on the downside first before potentially going long. Let's just look at price. What do we have going on here? We have the previous day's low. This is way too far for my liking. I would want it to take out this previous day's low and then run the relative equal highs. I'd rather take the relative equal highs and then get to the previous day's low because of how far it is. We have some intraday lows that happen to be what? Asia lows. So this is the Asia session. There's going to be liquidity above and beneath that Asia session. Let's go ahead and mark up this low real quick. So this low here, this is an Asia session low. It's at 2 o'clock in the morning. That is the Asia session. And if you guys want to know about the session timings, go to forexfactory.com and you'll see all your session timings there. So in other words, there's going to be money beneath this low. So that's going to be sell stops or sell side liquidity beneath this low. Don't forget, this is when I'm waking up. I can see we're blatantly not going for the relative equal highs yet, but in order for us to go for these relative equal highs, I need to see price run some kind of liquidity on the opposite direction. So in other words, Asia lows, this is the closest one, before potentially going long. And then technically, this is just how a normal candlestick forms on any time frame. So let's just look at this. When a bullish candle is formed, what happens? Price drops, then expands higher. So I expect the Asia session to open up like this, open up and technically go sideways, because when it goes sideways, when it's going up and down and just not really doing anything like that, liquidity is being built up on both sides. I want to see some kind of running of liquidity. I want liquidity to be taken on one side, so there's going to be money up here. I know this is awful pound signs, and then I want it to drop. It doesn't even need to run that top side first, but I want it to drop, and then I want price to rise after that. So hit some kind of area of interest over here. Let's just say there's something here, it's hit, and then I want it to rise and take out the actual money on top. So far we've got 2 core elements or 2 core parts of the intraday trading strategy. And just before I tell you about the third one, I have a TTTM 7-day program that's being launched on the 1st of May, guys. This is going to be the in-depth to my intraday trading strategies. This will literally teach you how to catch these moves in detail. You guys will know exactly what's going on. This video right now is just the 3 core elements, but within those 3 core elements, there's a lot more detail that goes into it. You guys have been seeing me catch wick entries. You guys have been seeing me catch the trades from the high of the day and the low of the day and taking it to the opposite way. You guys have been seeing all of that intraday action on my 7-day TTTM program. This most likely is going to be the very last program that I'm going to be releasing out there. So guys, I'm going to be pouring everything I know into this 7-day program. If you guys purchase it before the launch date, which is the 1st of May, you get a whole 3 month of mentorship after the program as well, so you guys can continue to learn and implement that intraday trading strategy. If you guys want 50% off at checkout, make sure you're using the discount code TTTM7D. So now the third core element of this intraday trading style is that price needs to run into something for it to turn around. When price runs out the Asia low liquidity, what was I looking for? What I did was I looked to the left to see what was down here on the left hand side. And I had identified a down close candle in here. There's also an area of inefficiency in here. This is where there is drawdown in this institutional candle in here. Some people like to call this down close candle an order block too. And there's an imbalance in here in the same area. So let's go ahead and mark up this imbalance here. In Asia, we do not come and tap into this area over here. That means that this area is going to be my reversal area. It's going to be my area where I expect price to go up to the upside and then look to target these highs. So those are my three core elements. There must be a liquidity price is going to be drawn to. There must be a running of liquidity on the opposite side. So in other words, I want to see price drop first and then price must run into something. And then technically, this is just how a normal candlestick forms on any time frame. All this looks like on a candlestick is this. Just to say this is a bullish candle. This is the Asia session when it goes sideways, when the price opens up for the day. Then it drops to run out some liquidity, hits into our POI, and then I want it to expand higher, you know, which is the body, expand higher. And then I want it to get to our agenda, then profit taking takes place down here, and then price closes off over here. So this here is this. So now when it comes to what I want, all I want for the day, so this is our new day, it's gone sideways, price hasn't really moved much. Let's just look at the range from the low to the high. So far, we have this low to this high. It's only moved 13 pips. I know it looks like it's moved a bit, but it's only 13 pips. That's practically consolidation. So in Asia session, we're consolidating. So we're doing this bit right now. Then I want it to drop, run out some liquidity, which is this. So right now it's dropping, whereas that liquidity over here. Then I want it to drop into our POI, our point of interest, which is this one here, which is our down close candle. And we can get all fancy. We can mark it up the whole down close candle from the high to the low. We can get all fancy with it. We can mark it up last down. And then I'll switch it to the 5-minute time frame so you guys can see what we're looking at. This is our whole down close candle on here. This is our POI. This is also where there is drawdown, because when price went down, the agenda was to go up, and so they're in a negative. So this is why we come down to this area to mitigate at this area over here. Mitigation is all about coming out of your drawdown positions. And then when it gets into here, this is going to be my entry area. And look at this, guys. This whole imbalance from the top of the imbalance to the bottom is 2.6 pipettes. Guys, it's not huge. It's not massive. So it's not a big range. So that means for me, when price gets into this range, I can look to get active and take it to the upside and run the money. So let's go and hit play a few times to get into our zone. Price is moving. Okay, I'm just doing one step at a time. Look at this, guys. We start moving up here. What's happening here when price is doing this? Price is trying to trick folks into thinking this is some kind of support and resistance zone with this little bounce here. But then you can see price runs through that level with speed, showing that this was never the true move. So now price has tapped into our area of interest. It's in this area you can go ahead and look to get active with buys for an intraday trade. Don't forget, it's at an institutional candle. And so when it's at an institutional candle, price can dig into this area a number of times. So now look, we've come into this area a number of times. Look at this, we dig into this area one more time. We create relative equal lows, we run those equal lows, and now we start the turnaround. Look at this, guys, we start pushing up to the upside. New institutional candle down here. So if you're not in already, this technically should confirm everything. Let's hit play a few times. You can see price eventually makes this move all the way back up to the relative equal highs. I'm going to pause it there. Look at this, guys. You don't move your stop loss early. You do not move your stop loss early. I don't move my stop loss early. I give the trade enough time to get to its destination. So when it was doing all of this funky business, look at this. When price got up this high, this is practically the majority of the move. It's an intraday move, yes. So once it gets into this area here, and it gets up here, that's about 13 pips. Some people would have moved their stop loss into profit by then, and if you had moved your stop loss into profit, let's extend it out to the right. Let's just say you entered from this, and you moved your stop loss 1 pip, or even 2 pips into profit. This level here comes in at 1.07648, and the low of this candle comes in at 1.07650. So 2 pipettes. So that means you would have been taken out in profit, and then price sort of ran to your area to take out this equal highs here. This is how I'll play it every single day when I'm bullish. So I'll expect price to run the lows, take out some liquidity, whether that be Asia low liquidity or a liquidity from the previous day. In my trading program, I'm going to be showing you guys how to pick high probability POIs, because that's a key thing. You pick the wrong POI, you can either miss a trade or lose a trade. I'm going to hit play a few more times. You can see where price closes out for the day. Let's hit play. So yes, you run liquidity, you trade well. That's important, because whenever price runs liquidity, price can turn around. This is why you either close your trade here or you take partials. And there's no harm in closing your trade, guys. Even if you close your trade here somewhere and price rallies up higher, look, you go again the next day. Yes, you would have missed out on a lot more pips. But guys, if this is your trading strategy, stick to it. You know, stick to this trading style. You don't have to be chasing all kinds of moves. You should be happy knowing that your trading style is working. Your trading style is doing the business. There's going to be times when price reverses after this. There's going to be times when price drops back into the range after this. And so don't beat yourself up when price goes through the roof and just keeps on going. That's why I always stress about leaving a runner on. If you can still manage to trade, definitely leave a runner on, because your runner is going to catch all of this. Those are 3 core elements of my intraday trading strategy. I go into a lot more detail on my trading program that's being launched on the 1st of May. Don't forget, use the code TTTM7D for 50% off. Okay guys, so I just cancelled out on all of this. Now I'm going to go ahead and show you guys some executions. There we go. You can see this is where I entered. Let's go down to a 5-minute time frame. So I'm in a 5-minute time frame now. You can see this is where I entered when price was in this area of inefficiency. And I took it right to this high, or above the high, not just here. I took it to, I think, around roughly about 5 pips above the high. So roughly about here into these wicks. And then I was done for the day.